A bold move by the Bank of Canada, reducing its trend-setting interest rate by 50 basis points to 3.75. A big part of the decision is the slowing Canadian economy and a decline in inflation. Let's talk about what it means to consumers and bring in CTV's Mike Couteur. Okay, Mike.
Well, Sandy, with this bigger rate cut, the governor of the Bank of Canada is trying to send a signal that the economy is turning a corner, and he had a direct message for Canadians.
I think Canadians can breathe a sigh of relief.
Tiff Macklem's message came with an acknowledgement that people in this country have been feeling the pain of high inflation for years. But the central bank leadership says with inflation at 1.6%, Canadian consumers should start to see a difference.
It means that prices aren't going to keep going up, but every time you go to the grocery store, I'm sure you're feeling that fact that prices have come up.
There is an admission that while some Canadians have benefited from increased wages, not everyone has. And while economists did expect this deep cut of 0.5 percentage point, many are calling for even more reductions to hit what's called the neutral rate of 2.75%.
And so as hopefully the bank rapidly tries to take out these high interest rates that are now actively harming the economy, aren't serving a purpose on the inflation front.
The 0.5 percentage point cut to 3.75% should benefit people with variable mortgages or a line of credit. But some in the housing industry caution it won't lead to a rush of home buying.
The notion of a 50 points cut also clearly indicates weakness in the economy. So in a weak economy, it's not that common for people to go out and make what's potentially the biggest purchase of their lives.
Despite that and the Liberal infighting, the finance minister was buoyed by today's rate cut.
The good news on inflation, the good news on interest rates is overwhelmingly the important thing for Canada and Canadians, and that is what has put on a smile on my face.
Tiff Macklem says the plan is to cut rates even further if inflation remains in that 2% sweet spot. But he didn't indicate how deep of a cut he might make in December. Sandy?
All right, Mike, thank you.